This is All India Radio. In the program Spotlight, now we bring you a discussion on the outcomes of the 49th GST Council meeting. The participants are Member of Finance Commission and former Finance Secretary A.N. Jha and Arjun J. Chaudhary, AIR correspondent.
Today we would be talking about the 49th meeting of GST Council, discuss about the key decisions made in New Delhi today in that meeting and what has been deferred for a decision later on as well. Mr. Jha, what is the significance of the GST Council meeting today that is being held in New Delhi and the decisions taken in terms of what the levy of GST should be on specific products? What is the significance of this along with the compensation cess that the government has released?
Few very important decisions have been taken today in the 49th Council meeting. The most important release of pending GST compensation cess. It has announced that provisional amount of 16,902 crores will be released for the GST compensation dues up to June 22. 2022, mind you, is the last month for which the GST compensation cess was applicable, because from 1st July 2022, GST compensation cess ceased to be applicable. This clears all the backlog, except the fact that once the states come back with the audited numbers, the amount may go up, as it has in the case of some states who came back with their audited numbers. They have been given an amount of 16,524 crores, which were due to them for the previous year. So all in all, almost 33,000 crores have been released to the states today as part of the decisions of the GST Council. Other than that, it has been announced that there will be rate rationalization for certain items. One of them is called rub, which is form of liquid jaggery, where the rate has been brought down from 18% to nil rate for this jaggery sold in the loose and 5% for packaged jaggery. This again is going to benefit particularly small farmers, etc., who prepare this jaggery from the sugarcane. Pencil sharpeners, which is used mainly by students, young students, old students. There the rate has been brought down from 18% to 12%, which is a very good and healthy decision which the council has taken. Again, for National Testing Agency, people who write the exams, they will not be required to pay GST anymore. So these are some of the rationalization measures they have taken. Apart from this, the late fee, which was to be paid for filing annual returns late, that has been rationalized and the number has been brought down, especially for smaller taxpayers. These are measures which are also going to benefit a number of people, especially the common man as far as the items are concerned, and small businesses as far as the rationalization of late fee, etc., on filing of annual returns is concerned. The FM also spoke about, in the press briefing, about two GOM decisions, one relating to taxation on gutka, pan masala, etc., where also it appears a decision in principle has been taken to move away from an ad valorem rate to a more specific rate. The details of which has not been shared so far, but I guess that will be available very soon. This is important because there's a lot of tax evasion in this line of business, and it is expected that this measure taken by the GST Council will lead to a reduction in evasion and also an increase in the collections from this industry, which has a very lucrative business. There's also a decision by the council on the recommendations of a GOM on constituting GST tax tribunals. They have agreed for setting up a national tax tribunal, which will have representation from the judiciary as well as technical members, and tribunals at the state level. I believe the details are being worked out, and these will be introduced as part of the finance bill when it comes up later in March this year. These were some of the major decisions announced by the Finance Minister.
Mr. Jha, you spoke about appellate tribunals being created and mechanisms to curb tax evasion. You also cited the case of specific products which are also termed as sin goods, pan masala and gutka. There has already been a recommendation, I believe, of 28%. Correct me if I'm right. What do you think would be the next step forward to ensure that there is rationalization of GST for these two specific types of products?
Well, the earlier discussion papers which had come out on this issue, it appeared that there was a move towards taxation based on capacity of the manufacturers. But I believe that has been given up, and instead of an ad valorem rate, now they are going into a specific rate. Irrespective of the price, they will have to pay a certain amount of levy as duty. This is going to curb evasion, in my view. Move to specific duty rate should be able to curb evasion. This is definitely a major sin good, and we also know that there are ways in which the industry manages to escape levy of taxes.
Mr. Jha, for the benefit of our listeners, would you explain in terms of how typically an enterprise is able to collect GST and deposit that amount to the government? Take, for instance, sin goods. You have labor and raw materials as the first stage in the production process, followed by manufacturing and then distribution. How does the GST get specifically collected in a hypothetical case where, say, 28% is being imposed?
See, there are different stages. GST is essentially a consumption tax. So the final tax is actually paid by the consumption agent. The person consuming it pays the final tax. But at each stage of the process of the manufacture and trade of the product, tax is levied and collected and deposited. And at the end of the cycle, when the final goods is sold, there is mechanism by which the value additions in the value chain get adjusted and settled. So typically, depending on the rate of the product, whether it is 12% or 18% or 28%, the process is the same. The only difference is that in certain cases, we levy a compensation cess on a certain type of product, particularly items like coal, tobacco, etc., where a certain compensation cess is levied, which comes in as an extra item on over and above the tax which is levied as per the rates prescribed. So there is no real difference in the mechanism by which thin goods are taxed or common necessities are taxed. It all depends on the rate of taxation, essentially, which is differentiated. Process remains the same. Apart from this, if there's an interstate trade involved, then you have to pay IGST, which is the intermediate goods and service taxes, which is paid by the supplier initially, and then it gets adjusted at the end of the consumption cycle, and the amount is settled between the state and the center as per the amounts collected on a 50-50 basis.
So essentially, GST is a value-added tax, but also including compensation cess for the benefit of states.
Yes, it's a value-added tax. Compensation cess is levied only on certain items. Those are specified. It is not part of all items. These are compensation cess is levied on specific items. If I remember, these are coal, tobacco. These are two items which come readily to mind.
Mr. Jha, there is also the intent to levy GST on online gaming and casinos. That has or not been a subject of discussion, but how important is it to tax this line of work as well?
Well, this is an area which is already under consideration by a group of ministers. I believe they have gone into it. Online gaming is an item on which internationally tax is levied in different jurisdictions. The issue here is whether you levy the tax only on the returns, that is the profit which is made, or you levy it on the turnover. So that's an area of considerable discussion and arguments, and views are there both for and against. But in view of the growing volume of business in this particular area, it is time a comprehensive view is taken, because we lose a lot of taxes because of certain lack of clarity in this.
So you believe there are cross-border implications. How do you see that being resolved? We saw how the centre was able to resolve the GST issue with the states under treaties, an act of parliament which was passed by all the houses. Do you see a similar move when it comes to cross-country implication-based tax system?
No, if it is outside, then we'll have to find a way through our digital platforms to tax them. But across within the national boundary, already we have a system where online goods suppliers, they are taxed irrespective of where the final supply takes place. So that's a very settled process. You may be buying a particular item sent by a aggregator from Karnataka in Delhi. That tax mechanism is well settled. So within the national boundaries for these online gaming apps, etc., the methodology can be easily worked out, and there is a certain degree of consensus amongst the states on how it has to be done. But across the countries, you will have to go on to the digital laws to regulate it to the service providers, internet service providers, other OTTs.
Mr. Jha, what about petroleum products? Do you see that being included in the GST regime as well? And how important is state cooperation to implement the GST structure on that?
Ideally, everyone says that, and it is true also, that a lot of input tax which can be availed by the economy as a whole, if petroleum products are also included in GST, is being lost currently. But then petroleum products constitute a major source of revenue for the state, and over which they have fairly autonomous handle on the rates that they may levy on by way of VAT petroleum. Similarly, centre also gets a considerable amount through central excise levied on petroleum, as well as cess and surcharges which are levied there. So both centre and the states have a fairly large amounts of revenue which are dependent on this item. So to what extent these can be foregone for a smoother and a more comprehensive tax regime is a matter which I think requires further discussion and acceptance across all levels, that maybe at some point, once petroleum comes under GST, there will be no significant revenue loss for either the centre or the states on this account.
Mr. Jha, finally, for the benefit of our listeners, you spoke about the composition of an appellate tribunal on GST matters. What are the typical disputes that arise when it comes to GST by any entity?
Well, I mean, there can be different types of problems that can arise. They can arise over the classification of goods, because these goods and services are classified into, they are broken down into several components. Classification issues arise. At what rate they are charged varies, depending on where you figure in that classification code. That can be one area of dispute. The other area of dispute can be the way you have computed your GST liabilities. Then there can be disputes on the input tax credit which you claim because of inputs which have been used and for which the GST authorities may dispute. So there are a number of ways in which it happens. And in the excise regime also, we have a backlog of number of cases which remain unresolved. Taxation matter can be interpreted in many ways, and each side wants to take the benefit of doubt to their advantage. So the advantage of having a tribunal is this, that in the process, in the courts, usually it takes a lot of time because of the backlog and the pendencies, whereas in tribunals, it is expected that they will be fast-tracked and dispute settle either way very quickly. Vivad se samvad. So it's a dispute resolution scheme where taxpayers have been asked to settle their dispute with tax authorities by giving certain concessions, etc., to them. So that type of thing is already there. It helps a lot both to the tax authorities as well as to the taxpayers if their settlement can take place quickly.
Well, thank you so much, Mr. A.N. Jha, for being with us on All India Radio on our program and explaining to our listeners in detail how the GST mechanism works and the significance of the 49th meeting of the GST Council and its decisions taken today. Thank you so much, sir.
Thank you very much.
You were listening to a discussion on the outcomes of the 49th GST Council meeting. The participants were Member of Finance Commission and former Finance Secretary A.N. Jha and Arjun J. Chaudhary, AIR correspondent. This program was produced and presented by the News Services Division of All India Radio. You can listen to it on our mobile app News on AIR. This program is also available on our YouTube channel News on AIR Official. You may email your opinion about this program at airnsdtalks@gmail.com.